We'll see. Please, can I ask you to all mute your computers, please, so we don't have... Trying this one. Okay, once more. Now, this is much better. Welcome to our session this afternoon. Thanks for showing up. Also, warm welcome to our audience who joined from across the continent and from Germany. Nice to have you here as well. My name is Deria. I will moderate today's session with the help of my colleague Dan, who will have a close eye on everything which is going online. So we invite our online audience also to engage via the chat box or raise your hand if you want to participate verbally. Yes, so the session has been prepared to you by 2 projects and with the great support from FMB. We have the project Access, which is based out of Senegal, and they're working towards improving access to finance for SMEs over there, and they have been piloting digital solutions. And we have the Pan-African E-Commerce Initiative. That's the project where I'm working for, and our objective is to improve e-commerce across the continent. We are currently piloting activities in Rwanda, Kenya, EIC, and Ghana. Yeah, and we have a full program prepared for you today. We will start with in a plenary format with 3 presentations. First, we will have presentations by Salia from the FMB. He will set the scene for us in terms of the huge potential digitalization has for the access to finance for MSME sector in Africa. So he will lay the foundation for any further discussions we have today. Then we will have an input from Jael from the Access project, and she will share with us the case study from Senegal, how they use digital solutions to improve access to finance for SMEs. And this will be followed by a presentation from Judith, who has been supporting the PECI project in the last year on e-payments and the potential of e-payments for cross-border e-commerce in Africa. Then we will have a short break of 10 minutes before we move on into breakout sessions. We will have 2 different options. After the plenary session, we will introduce what the breakout sessions will be about, so you can make your choice during the break. And then we have the breakout sessions until, now we're a little bit behind schedule, so I will announce the actual time later. But we will come back into the plenary to bring together the key takeaways from the breakout sessions. So that's a little bit the plan for today. We will record the session, so I'm asking here for your consent. If you don't want to be in the recording, please leave the room or leave the online room. Yes, and I think with this we can start. Salia, could you please come to the front?
Great, thank you very much, Daria. Thank you to all of you for attending our session after lunch. I hope your digestion is going well. I'm presenting this part together with my dear colleague Jakob, who you can't see, but he's there in cyberspace. And we just wanted to start, I mean, really this is the first part of a presentation looking at digitalization, how it's affecting access to finance for MSMEs, because we see increasingly that even the analog MSME finance projects that we have, they're all now digital, inevitably. And we wanted to, I think we know this already, but we wanted just to look at some of the issues that are affecting MSMEs and look at how digital technology is enabling the financial sector to really start to address those issues, and talk also concretely about some solutions that are not just on a design board somewhere, but are actually happening in real life. Just to give you a flavour before we go into more detail for the session from Israel on Senegal. So I won't talk about this too much because I think it's our Bible. We know it already. You know, even in Kenya, if you look at the importance of MSMEs in terms of employment, in terms of making enough money to survive, the massive importance of MSMEs across Africa and in Kenya, and especially informal. I know Kenya, I think the rates, over almost 90% of employment is created in Kenya in the informal economy. So we see the importance, we know the importance. So we'll take the perspective of MSME. Next slide, please, sorry. Sammy, we have Sammy's MSME. I'm not sure if Sammy is a girl or a boy, but for our purposes, it doesn't really matter. But we ask the question, what does Sammy need for financial services? So what we often hear, whether it's working from the financial sector side or the private sector, that my number one constraint is access to finance. We need finance. And from our team's perspective, is we see that different financial services are necessary in every phase of the life of the business. Whether it's resilience, survival, growth, or productivity, financial services have a very important role to play, and we can afford cash. So when we talk about access to finance, people often think about credit, and that's a very important part. Credit, investment. But we also talk about other financial services which enable you as a business to smooth your income streams, to invest, to protect yourself against risk. Here we have a hopefully functional interactive exercise. We'd ask you to go to Meetup, and we're going to ask you to take 2 minutes to brainstorm. You know, from your experience, I think you're all working in or with African countries. From your own experience in your own countries, to think about what are the main bottlenecks to access to finance for MSMEs in Africa. Why doesn't Sammy have access to finance? And that could be issues on the side of Sammy's business itself. It could be from the perspective of the financial service provider. But we'd like to ask you to think about that for a minute or two. Go to menti.com, input the code, and then we'll have an exciting word cloud coming up, which will show the results. For online participants, the link should be in the chat, I believe. Jacob, if you can hear me. It is. But I think we'll have to show the word cloud. Okay, perfect. So think about it. You have another 73 seconds. We know the challenges, and it's a dynamic thing. It can keep changing, and they're all challenges. Looking at the side of the looking at the side of the MSME, so a lack of collateral is a major issue. Improper record keeping, so no kind of information basis for the banks to make decisions on. A lack of creditworthiness, inadequate bookkeeping, a lack of capacity. They all come up on the financial services provider side. They're risk averse. They see MSMEs as a high risk and a kind of unknown element. They don't necessarily have staff who understand the MSME, the different sectors of MSMEs, they possibly have a feeling that MSMEs are risky and not worthy, and really not worth taking the risk on. So there are a number of issues there, and we just tried to put some of them in the next slide. If we can go back to the presentation, it's not exhaustive because I think there are a whole bunch of challenges, but we tried to put some of the main ones from our perspective onto this slide where we talk about on the demand side problems which I think you all know about very well from your daily work, and also the supply side. Yeah, and an important constraint beyond that is also the regulatory level. You know, what are the regulatory requirements? Do they allow financial services providers to go into these, you know, let's say less formal, less strong segments, and other issues there which could also be addressed, for example, through a GIZ project supporting a central bank. So those are some typical bottlenecks. We're gonna do a hybrid now where we go over to Jakob virtually. Jakob is gonna just take us through some of the technologies that are coming and looking at how they change the game potentially for MSMEs and their access to finance, and also to take you through some examples we found of sort of interesting developments which we can look at, learn from, and maybe think about when we're working in our own program. So I'll hand over to Jakob, please.
Thank you very much, dear Salia. Yeah, so thank you very much, dear Salia. We have started hearing a lot about different constraints. So the next question Sammy's actually having now is how can I get it? So talking about financial services, and here I created a slide to show you that there are generally a lot of technological trends that open up new paths for financial inclusion and MSME finance. And I would ask you to take a look at this slide, but then rather than focusing on explaining all of these trends, I would rather go into talking about their impact on MSME finance. So the first thing I want to talk about, because it's the most famous example, is payments as a financial service that has been transformed by digitalizations. Digital payment solutions like mobile payments and electronic checks allow MSMEs to perform business transactions online and are safer, more efficient, and cheaper in general than using cash. They also create new finance opportunities like digital lending and enable swift disbursement and repayment of loans. Here, loan application processes can also be improved by using technology, for example, for regulatory requirements, where, for example, biometrics for know your customer requirements can be used. Next, I want to mention the rise of digital platforms. Thank you, the slide still. The rise of digital platforms is closely related to the emergence of cloud computing. Such platforms support the provision of so-called microservices, which are small services, loosely coupled and independently deployable. An example would be digital insurance platforms for MSMEs. Benefits here are higher scalability, reliability, and availability. So overall, an increase in customer value. Quite often, such interventions are leveraging advanced technologies like artificial intelligence and machine learning, which brings me to the point I want to stress mostly on this slide, and that is the importance of data and data analytics. Saving, processing, and making use of both traditional data like accounting, transactional, and sales data, just as well as alternative data, which can be online ranking, social media, and individual data, is absolutely essential as a step towards digitalization. Data is basically knowledge, and knowledge is basically the key to solve existing problems and making the financial system work for currently underserved firms or individuals. Benefits are reduced risks and costs, faster processes, and more. The important to know is that the necessary data is already out there, but it is often not gathered or stored. And a great way of making use of data is, for example, advanced credit assessment methods. Then lastly on this slide, I want to mention non-financial support that has only an indirect effect on MSME finance. For example, several banks have developed online trainings and mentoring efforts to promote digital financial literacy. And this is very important to raise the awareness for new financial services and how they work, particularly important to improve the demand amongst vulnerable segments. So on the next slide, Sammy is asking his last question for today. Who is getting all these fancy new technologies and financial services to me? And here I could offer a very short answer by saying many different stakeholders are interested in doing so. Competition, customer expectations, and regulations are all factors that push institutions to innovate and offer better tools to their customers. To also stay relevant in the future, traditional finance institutions like development banks, corporate, commercial banks, and microfinance institutions all cannot afford to not keep up with recent technological developments. And then there are also tech firms who are pushing into the markets, and they are doing so basically in two ways. Firstly, an indirect way by supporting traditional financial service providers to develop their own digital offerings, and then in a direct way by offering banking as a service, which basically means creating highly specialized products that are only one element of a traditional banking value chain. So this means there is quite a range of new financing opportunities on the horizon for Sammy and his MSME. And as you can see, he's quite happy about this. And then I want to present a couple of companies and products that actually already do offer digital financial services in Africa. However, please note that I won't go over these cases in depth, but you, at least as a digital participants, have the chance to click on the headlines for additional informations. And however, please also note that these cases are not meant to be advertisements or endorsement, but are just supposed to give you a feeling of what is there in the market, and yeah, really stress that we are right now not talking about some distant future potential development, but are talking about something that is already happening in the market and all over the place, basically. My first example is Winebow, as a company that is supporting financial service providers to deliver their products. They are addressing a lack of infrastructure for the so-called last mile of delivery. For example, they use biometrics to onboard new customers, offer digital solutions for agent management, and help to integrate different existing third-party services into a single marketplace. Social Lender is a digital financial service solution that is making use of alternative data for better credit risk scoring. They have created an innovative algorithm that calculates a so-called social reputation score. This score can then be used to apply for financial services at a bank. For example, Facebook, Twitter, or LinkedIn account can be used here. Then on the next slide, I want to show you the example of 4G Capital that provides digital financial services and business trainings. Their disbursements and repayments are made via mobile money to provide instant working capital for entrepreneurs and for traders. And the way they do it is use modern AI technology to minimize default risk and combine that with digital business trainings to help clients then maximize their profits. Tumo is a mobile financial service platform providing partners a banking infrastructure with low operating costs. They use AI and machine learning to analyze data and reduce the cost and risk of lending for their partners. The company uses USSD shortcodes to deliver third parties financial services, and they target especially clients without collateral or an existing credit record. And then the last two examples today from my side are Tontine, which is a digital platform for tontines. And tontines are traditional savings groups that have a natural cycle of regular payments and therefore can be used as an alternative for collateral or credit history. In this way, participation in a tontine can be used to access a range of additional financial service from partnering institutions. Bankability is a software that helps traders and projects to become creditworthy and investment ready by conducting a standardized Q&A and from there derive an automated due diligence report. They also verify necessary documentation and then forward the whole portfolios to financial institution who then can have a look. And then, yeah, actually two more examples from my side. Patacente, which is an online platform that is on the next slide, please. So Patacente is an online platform that is connecting micro businesses with private lenders. The way they do it is publish a loan request for input supply and then a credit score based on a buyer's credit history on their website, and private lenders can then view these loan requests and credit assessments and choose or choose not to finance these loans. And now the last example is Apollo Agriculture, which is a technology company that aims to help small-scale farmers to maximize their profit by offering bundles of financial services customized for them and their needs. And examples would be insurance products or channels for market access. And to do that in a cost-efficient way, they also make use of technologies like machine learning and remote sensing. And yeah, knowing that this was quite a lot in quite brief time, I want to hand back to Salia to finish.
Thank you, Herr Fischbacher. Yes, so, I mean, mainly we want to encourage you. I mean, part of the reason for this Fachverbund is to exchange. There's a lot of experience in the room. Things are coming, things are developing, and we're there in head office. We're happy to support. When I come to the last slide, you'll see that in a minute. You can contact us in terms of understanding what's out there, but also to encourage you when you have good examples, good developments, to share it with us, share it with others, so that we can learn from each other and really take these things forward, because they're happening now, and especially in Kenya, from coming from M-Pesa. It's an amazing example of all the things that are coming from this sort of basic mobile payments infrastructure. It's unbelievable, with a farmer in the middle of a rural area getting an agricultural loan from a financial services provider who's never met that person, because they combine the data from the agricultural cooperative with satellite data, with production data, with all these different things, with their M-Pesa data, and they predict and give them a loan based on their agricultural needs, never having met them, without having a branch outside of Nairobi. So it's really fascinating what's happening in Kenya. I think it's great that we're here, because Kenya probably is the forerunner in terms of all the possibilities, and would very much like to stay in touch with you, see what's going on and developing over the next years, and really try and ensure that we learn from each other, have synergies, and go on this digital journey together. So thank you very much for your time, and we'll now go on to the final slide. Mr. Willett, to Senegal.
Yes, thanks, Salia and Jacob, for this excellent introduction to the topic, and also peppering it with some examples. I think that's all for us useful to look into these digital MSME finance solution afterwards. As Salia was saying, the spirit of this whole conference is exchange. So thanks for this. We will now, I also would like to thank you actually for proving so beautifully that the hybrid format is working. I think that was very smoothly. We will now move on to our next presentation. It's aligned to the first one, more focusing on a case study from Senegal. And after this, we will take questions and comments. So also to the online audience, please feel free to use the chat for any questions or comments you might have. And with this, I hand over to Joelle, please.
Yeah, thank you. So I'm Yael. I'm working in the project Access to Finance for Small and Medium-Sized Enterprises in Senegal. Next slide, please. So yeah, the short name in French is AXE. We are a BMC financed project, a bilateral project in the reform partnership between Senegal and Germany. And we work especially with our local partner, Senegalese SME agency, who is under the mandate of the Ministry of Commerce. Next slide, please. You can skip this one, go directly to the next one. Yeah, so if I, like, just for making it clear, SME of course includes MSME. Just in French, you have the problem that the French abbreviation for MSME is not really known, so we use normally just in French the SME abbreviation. But of course, we are talking also about micro enterprises. So MSMEs make up 98% of enterprises in Senegal. So like most of the economy is MSMEs. But they only make up 9% of the credit portfolio of banks there. So you see that there's a huge gap between the financial sector financing MSMEs in Senegal. And you can also see that there's still a potential of the MSME sector to contribute to the GDP. So you can see it in the comparison to Nigeria and Ghana that there's still a huge potential. So MSME actually need access to finance to have a full potential and to contribute more to the GDP. Next slide, please. It's already come, okay. Yeah, I think for the barriers to access to finance, we had already the word cloud. So I mean, it's the same case in Senegal than probably for most African countries. There's of course the cost and time to process the MSME applications. There are the amounts that are not big enough for banks to be interested in handling the application, etc. So yeah, I think it's clear to most of us because we worked with these problems every day. Exactly. So what our project does, we have 3 solutions. I will focus only on the first one in this presentation. It's a digital platform that connects MSMEs and financial institutions. I will come back to that in a second. The second activity is that we strengthen our partners. So we really focus on letting the Senegalese partner do the job directly with the MSMEs, so not financing directly MSMEs from our GIZ budget. And so we focus, for example, on green finance, gender finance, and we also want to regionalize the service of our Senegalese partners. So we work in 6 pilot regions with Chamber of Commerce. And the third activity is a coordination forum. Here we work with the national, like, I don't know the English word, BCAO is the regional central bank for the French-speaking West African countries. And there we develop recommendations for access to finance for MSMEs in Senegal. So next slide, please. So I hope you can still like read a little bit the process. So this is our idea for the digital platform. The digital platform does not yet exist. We are going to start the programming process with an international IT company this month normally. And then we are planning to have the MVP ready in this end of the summer and like the really final version end of this year. But we have already worked with our Senegalese partner on how the process should work in this digital platform. So this is what I will present. So you have, first of all, an information platform where we put like information on how to manage a business, how to create a business, but also like the whole information on financing types. What do I need to apply for finance? So that really an MSME that needs this information can directly go on the site and has really all the information that they need. and also provide templates, for example, for business cases, financial statements, etc., so that they already have this access to information. And then they can create an account and actually do an application for a financial product. So they will express their financial need. They will say how much they need. They will upload if they have their financial statements, etc. All the information that that are required to do a request. In order to have really the good information, we are working with financial institutions. We ask them, what information do you need? So we can really be sure that all the information that we will ask the MSME to upload actually answers the need also of the financial institutions. So the Green Cloud is actually this cooperation with the financial institution. Yes, it's working. Okay, sorry. So we also plan to put the offers of the financial institutions directly on the platform. So the idea is that the financial institutions put their products there, so they have also like a commercial incentive to actually participate in the platform. And so there will be a first pre-selection of the products to the financial need that was expressed by the MSME. So for example, if the ticket size is really low, then we would rather recommend a microfinancial institution product and so on. So for example, if it's a loan request in the agricultural sector, we would probably recommend a product that is from a bank that is specialized in this area. And then there's a whole process of actually improving the request. So in Senegal, a problem that we have is that most of the MSMEs don't have financial statements, or they are not reliable, etc., or the business case is not really well developed. So there's this whole process of improving the file and also encouraging the MSME to formalize. This process is all done by our partner agencies, so ADPME, and they work together with consultancy firms where they outsource this process. And when the file comes back into the platform after this improving process, we can be sure that it's a file that answers the needs of the financial institution. At the end of this improving process, there is an E-rating. The Senegalese partner already has an E-rating already in place, but we're planning to improve it. And this E-rating, actually, the idea is to have a grade or like a rating that can be used by the financial institutions to see, okay, this file has like this and this rating, I can really go for it, without having to redo the whole process of credit analysis, etc. So the idea is to reduce the cost of processing the file, the request, and also reducing the risk for the financial institution. Then, of course, we are hoping that this will lead to financing. So this financing contract will be really a private contract, so between the MSME and the financial institution, which will be done outside the platform. And in a later state, we also plan to include post-financing, because a demand that is often expressed, for example, also by the consultancy firms that work on files, is that they don't have any visibility on what happened actually after the financing contract was signed. So if was there really a payback? Were there problems between the MSME or the financial institution, etc.? So this post-financing topic will be also included in the platform. Next slide. Okay, perfect. Thank you. So this is just like a short list of the advantages of the platform. So for the companies, for the MSMEs, first of all, they have a visibility on the different options that exist on the market that they normally maybe don't have because they just used to work with their like bank, or maybe not even that. And they have this support on access to finance, so they will really be guided through the whole process of applying for financing. For the financial institutions, of course, they have access to eligible customers, so the idea is really to increase the eligibility of the MSME. And as I already said, the reduction of risk and cost through using like this platform. So that makes also the processing of an MSME request more profitable for the financial institution. And for the supporting structures like consultancy firms, or also our partner, they have an efficient, semi-automated and transparent process where, yeah, the rate of success of their accompagnement, I don't know the English word right now, yeah, exactly, is improved. So the idea is to have more transparency, more financing, and yeah, so this is like our digital solutions that hopefully will be in place end of this year. Yeah, we can go to the last slide. The next one. So actually our idea why we wanted to present this is also to, yeah, let's say, have your inputs, have your comments. Maybe you have experience with digital solutions. Maybe you already know that there will be something that might not work like we have planned. To have your inputs on that. So we have like a little bit questions to you, but of course you can also ask questions to us. So, I mean, do you have experiences on that with similar approaches? In your view, what will determine the success or the failure of this approach? So we will be happy to also have your inputs on that. And yeah, thank you. So I think we are taking questions, and I will ask Salia to also join me. Yes, I think we have to. Yeah, is there a second microphone?
Okay, thank you.
Questions to Yao, please.
Okay, well, thank you very much for the presentations. I thought it was very interesting. And I do actually have a couple questions and maybe also some ideas. I mean, I also work in Senegal. We're also trying to put in digitalization or a digital platform right now. So maybe also, even though it's on a different subject, maybe facing similar problems. And so my first question, and maybe you already said this, is who exactly is putting in the data into the platform? Because depending on who it is, I think there could be a couple of problems there, depending on how well they're able to use the platform. Once again, user journey. I guess so. Like digital literacy would be a question there. A second thing that I think is interesting, because now we're talking about financing. You were saying that one of the ideas is that once I think the applications or the participants go through this process, they can immediately then, or in future, their data can be used without having to go through another approval process. So in that regard, I think trust could be an interesting, or could be a problem. Will people, or will the banks really trust this procedure? And that would probably then have to also do with them having to understand how it works and awareness raising. So I think that could be a challenge. So maybe I'll leave it at that. And I'm sure I'll get another chance to ask more questions if I want to. Thank you.
Yeah, thank you.
Can I just quickly amend the first question as well, because we have a question online as well, who's going to host the platform? So when it comes to who's uploading the data, maybe who's hosting as well?
Yeah, okay. I don't know if this microphone works, but I will just assume it does. I also have my project director, Severin Peters, who is online. So if he wants to answer too, I will also let him answer. Yeah, so the question on trust is, yeah, I mean, we're aware of this. That's why we already include the financial institutions before actually programming the platform. So the idea is to have a really strong link with the financial institutions, to include them in the process, to ask them if this process makes sense for them, what data do they need, etc. So this is maybe already a first step to be sure that the financial institutions will also participate, because if they don't participate, I mean, the platform will not really work. And the Senegalese partner also will sign contracts with financial institutions that will also ensure that there is an active participation. Then the question of using the data again for another request, of course, is is I mean, a good idea. Yeah, so I think your first question, yes, exactly. Yes. So as I already said, we're working in 6 pilot regions with the Chamber of Commerce. So one idea in the regions where our Senegalese partner has no like office, for example. First of all, is that there will be one person sent from this agency into the region to actually accompany. I really don't I never know this word in English. Accompany, yes, it's the same word actually. Accompany the SMEs in the regions to really put their data on, because we are aware that this could be a problem. And then, yeah, I think one idea would also be to have, once the platform is ready, to have actually trainings with MSMEs. So our Senegalese partner has a huge database of MSMEs that really want to have finance, and to use this database to invite the MSMEs to explain them the process in the platform. If they want to already create an account, to really sit next to them, create the account with them. So this could be an approach. So I mean, yeah, we are aware that this could be a challenge, and yeah, I mean, then we could approach this with on the one side trainings, but on the other side also like taking them and doing it with them. And then the question on who is hosting the. Yeah, so the data, like I said, is normally, like in a perfect world, uploaded by the MSME itself. I mean, yeah, as I said, then we will have agents of our Senegalese partner who will also be able to help them to put the data on their account and on the request. And who is hosting the platform? It's our Senegalese partner who is hosting the platform. So yeah, I don't know if Severine wants to add something. Yes, it's a state agency.
No, it's fine.
It's a state agency.
No, it's fine. Thanks.
Yeah, it's under the Ministry of Commerce. Other questions, comments?
Sorry, you were asking about similar examples in other geographies. We actually set up something similar in Nigeria, not with GIZ, but with the UK8. And we did it with a public partner as well, Smithon. And for us, it ended up being only like a credit catalog, because even though there was a lot of commitment from the public partner, there was no sustainability because they didn't put the adequate resources to maintain the platform. There was no real interest from the financial institutions to keep the platform alive, update the financial products, etc. And then the MSMEs had a lot of challenges updating the information there and validating, because I can say that I'm Dangote, I'm a millionaire, and I'm very credit worthy. And for us, there was a challenge in validating this information, and the financial institutions lost interest and they didn't think it was worth. So after the funding of the project was completed, the platform died. So aside from looking for a public partner, I think it will be interesting to find a private partner that can actually make money from it. Like, for example, in Europe, we have Rastreator. I don't know if you have it in Germany, but you can actually have these platforms that compare insurance, financial products, digital devices, whatever it is, and they actually get a commission from when they transfer the customer to that final provider, because otherwise I find it challenging to find the right sustainability for this platform according to what happened to us. And maybe in Senegal is different. Also, you were mentioning that you are reducing the risk of the MSMEs, that they are more worthy of that lending. And I was wondering how you are really reducing the risk, whether you are doing some entrepreneurship training, whether you are doing some financial literacy for them to really assess how much loan they can repay, etc., etc. And then the data validation I already mentioned. And then the transaction facilitation and materialization, does it happen outside the platform? Like, for example, I put all my data and then it actually goes to the financial institution that does the lending directly, or how does it happen? So that's all from me. Thank you.
Yeah, thank you very much. Good afternoon, and thank you for the presentations. Yeah, it seems the digital platform is the thing. Almost every country is trying to experiment with this digital platform. And I think it offers us a lot of opportunity to look and see what are the lessons learned and what can be avoided, but how also do we ensure there is sustainability beyond the project models of GIZ. And I work with WeDo.Africa, and WeDo.Africa also is a digital platform that is bringing together the diaspora and also the micro enterprises, SMEs, etc., but also with the private sector, the coaching aspect. So we're trying to combine financial development, like the provision of the financial grant and the technical expertise, where we are developing the capacity of our beneficiaries in terms of financial literacy, bookkeeping, so that they can be bankable, but also so that they can be able to transcend to the issue of becoming formal organizations that they can assess finance. And the issue of who owns, who controls the platform is a very important question for GIZ based on our model. I think we haven't been able to overcome that question for ourselves because the platform is owned by GIZ and BMZ. And so every time when we have this conversation about the platform, the first question our partners ask us is who is controlling this platform? And I feel your solution is a very good one to have a public ownership that is owned by the government, but also the private sector, someone who can make money from it so that it can be also very sustainable. But let me just focus a bit on digitalization and what exactly does it mean for us? Because it's also a catchword, a buzzword. Everybody's talking about it, digitalization, digitalization. For whom and for what? You've given a very good example of M-Pesa. I'm Kenyan, and the M-Pesa became a tool that has been accepted by everybody, especially during the COVID pandemic, where you can just, request for groceries and someone brings the groceries on your doorstep and you pay for groceries without having any contacts, So in that kind of a setup, you can be able to withdraw your money from the bank. So there's a benefit for the user on the ground. There's a benefit for the bank. They're getting some, tariffs or whatever cost it is for them. So I think we need to unpack this financial literacy and not financial literacy, sorry, this concept of digitalization and ask the question of digitalization for what, for whom, and how do we sustain this digitalization? Because some of our beneficiaries just know how to withdraw the money and send it back. And the question is, how is that sustained in terms of capacity? So I feel that, of course, in the development space, we come with all these very interesting buzzwords. And sometimes we also don't understand exactly what they mean. And we've read very beautiful concepts from them. And at the end of it, we don't sustain that effort. So there is an opportunity to really unpack this and ask the question of, we're creating so many platforms for what, and how do we anchor these platforms? It's a pity that we don't have the regional economic community blocked in this conversation because there's a cross-border aspect of it. And so that we also don't look at this issue from a national point of view, but look at it, how do we regionalize it? How do we anchor them to the conversations that are happening at the cross-border? Thank you very much.
I think we also have one question online, or at least one handout from Mr. Pico. I don't know if you want to just quickly say that, and then we can take all the questions together. Maybe if you want to quickly unmute yourself and ask the question, please.
So we're like a lot of questions. I try to answer briefly. So first of all, we are very lucky to have a partner who actually requested our support on this platform. So we have a really big ownership of our partner on this. So that's also why it's not the GIZ who hosts the platform, but our partner. I want to start with that. But yeah, actually, it's the question of sustainability. What will happen when the project ends is, I mean, a essential question. We have not like a perfect solution yet. We have ideas. One idea would be that, for example, the financial institutions pay a little fee when they receive a request. So because we are actually bringing them customers so that they would pay for the service. Or what the partner organization is already doing on like a non-financial service aspect is that they have also sometimes the MSME who pays like 10% or something of the cost for the service. But yeah, I mean, this idea with including also a private actor could definitely be also a great idea. The question on how we actually reduce the risk for the MSME. So as I already said, there are consultancy firms who will work with the MSME on their files, on their financial statements, on their business case. So there will be this aspect of support the MSME in this whole process of the financing. We also plan to have on this information platform, so the entrance point into the whole process, to have there a learning platform. For example, we have, I think Vido has also trainings, there is a Tingy, so we, for the beginning, really want to use also already existing structures and solutions on that, so that we also have like a training aspect on the platform. So I think this is also like a little bit, yeah, I think, I don't know if we are already in exchange with Vido, but I definitely, we should be if we are not yet. So yeah, I think, yeah. And for the cross-regional point, I think we have a perfect example in the next presentation. So I think we can come back to this point. Thank you.
Thank you. I mean, just briefly from my own experience, of course, it's different if you're working with one bank, which is already digital, helping them to improve their credit assessment technologies, compared to working on this kind of platform or looking at a regional platform. You know, the complexity increases, and it's much easier if I'm working with Equity Bank on Project X than it is if I'm setting up a national platform. I'm not commenting on Senegal, but just in general, my experience has been, you know, I sometimes get the feeling with GIZ we're a little bit supply driven. If I go back to what Dr. Albert said yesterday, if it's more than 50% your idea, then it's not going to work. Sometimes, especially on topics like digital or green, probably, exciting topics from Germany, probably we're sometimes varying 70, 80, 90% our idea, sometimes more. But my experience has been all the questions you raised, they're all super valid questions. It's probably relatively easy to develop a digital platform. What's difficult is, have you put in the necessary, and this is what I think as GIZ we can do very well, because we have people on the ground who can understand, who can build relationships, who can talk to people. Have we done the necessary groundwork to really understand the context, understand the needs, ask all these very valid questions that you talked about, make sure the politics are aligned, the incentives are aligned, the sustainability is planned for, the buy-in is there, and make sure all those steps are in place while the platform is being designed to make sure afterwards it's going to work. And I think, you know, I don't think we always do it as GIZ, if we're honest. The platform is a solution, but if we bear that in mind and really think things through, walk and talk things through at the beginning, we have a much better chance of developing things which will work, can work, and should work.
Yeah, so I have my project director who also wants to comment. So Severin. Can you hear us?
Yeah, thanks. Yes, I can hear you. Can you also hear me?
Yes.
Okay. No, many thanks for all the question also from my side. I think the sustainability aspect is definitely critical. Just what I wanted to add is that we are really talking here about digitalizing the core processes of our partner organization. Once the platform is there, then their core work will go through this platform. So this is not kind of an add-on project that hopefully they will dedicate some time to do on the side. And to me, the main question will be that this approach is reliant on funds to pay the business development services who work with the SMEs. So this is really then the job of the partner organization. If we as GIZ cannot fund this anymore, to find another development partner who can. Then this other development partner doesn't even need to say, I support this GIZ platform, but just I support this core process of our partner organization, ADÖPMÖ, which then ideally will be able to show that, okay, if you give us $100, then we can get you one financing or one credit for an SME for it. So the idea is based on the data-driven approach to really have an interesting offer, but which in the end will still be on a large part subsidy-based, or maybe have another part, as you pointed out, for Nigeria, maybe which will just link the actors directly, but then of course with a lot less trust building measures. That's just to add, and yeah, really many thanks for all your comments and questions.
Thank you.
Thank you very much for sharing this interesting solution, and all the best with the implementation. And maybe in a future NEDA conference, we will hear the learnings you've made. So now for the next presentation as part of our plenary session here, we will shift a little bit in terms of topic. Now we will look into the whole issue of e-payments and how e-payments are critical for SMEs to benefit from digital trade. For this, I would like to invite Judith to come to the front. Judith is an independent consultant who has been working with the PECI team over the last year on the development of an e-payment blueprint. Yes, and more she will tell herself.
Thanks, Daria. Good afternoon, everyone. As Daria has said, my name is Judith Engels. I work in the area of inclusive digital economy. So to come to you, digitalization all the way. That's really all we're talking about. And hopefully through this presentation, I'll be able to bring out some strong use cases. So I will provide you a brief overview of the e-payments ecosystem in Africa. And then last year, through GIZ, we developed a blueprint for cross-border digital payments to facilitate trade within Africa. I will touch on that also briefly. And then lastly, discuss a use case, which is also generated from the e-payments blueprint, a use case that we probably are aware of, which is a Pan-Africa payment and settlement system. So just to get started, when we talk about e-payments in Africa, and I think this afternoon the discussions are really touching on, different aspects of digitalization in Africa, but it always comes back to payments. If you're offering farmers, or if you're working in the agriculture sector, there's an exchange. There's the digitalization aspect, and then there's the exchange of money. And if we're talking about digital systems, then that payment also takes a digital format. And so within Africa, we are seeing 400 million consumers using mobile payments. Again, like has been said before, Kenya is one of the pioneers of mobile payments, but this now has become practice, not just in Africa, across the world at a global level. And mobile money is really in most markets with different variations, an accepted method of exchange or an accepted payment method. And so the forecast is that by 2025, there's going to be between 650 million to 750 million customers. And this is really within the African context. And if we bring this to the level of African marketplaces, we see that there are some fragmentation. There is some fragmentation. We see, that the digitalization is not end to end. There's a break in between, logistics. There's a break in between payments. Sometimes even the ordering processes is manual, in as much as the product on an e-commerce or a digital marketplace. International marketplaces, we know about them, and we know how those roll, so I won't spend much time on that. Now, when it comes to e-payments, why are we excited about e-payments? Why are we discussing e-payments to begin with? And that's because e-payments, actually, if I take the example of M-Pesa, you see, for the longest time, there was digital activity. But then it was constrained because if there's digital activity and it's digital trade, for example, like I said, there's got to be the point at which payment is made. Now, the moment you digitalize that payment, then you unlock a lot of other things. And that's why we're seeing the era of the fourth industrial revolution. That's why we're seeing digitalization becoming an everyday thing. That's why we're seeing suddenly internet of things. Everything is possible. That's because digitalization can unlock a potential that previously did not exist. Contributing to SDGs, different SDGs as you see there, and especially when we talk about MSMEs, access to finance and investment, it can facilitate business growth, job creation, and overall economic growth and livelihood. And then when we come to e-payments and trade, that's also a very interesting one because we know that the continent is just coming together and actualizing the Africa Continental Free Trade Area, and which has already begun and is anticipated to also unlock trade opportunities, Pan-African trade opportunities, and to a larger extent outside the continent. And so this is important for trade. And so digitalization is also coming into this space, e-commerce and digital trade. And I will now just take you through the e-payments blueprint, which, like I said, was developed last year. And the e-payments blueprint is really an interoperable, safe, affordable, universally accessible, very key words, inclusive and responsible African cross-border e-payments ecosystem. So as I speak, you will keep hearing the word interoperable. I think from the examples that have come before me, and when you talk about digital platforms, one of the first questions that comes up is, this platform is interoperable with which one? Because we are developing platforms. I think that was the discussion that preceded my presentation. And it's about time that we are looking at interoperable platforms. Now, I will explain a little bit why interoperability is useful. If we have platforms A, B, C, D, E, for the users, it is really, they're only constrained within that platform. They can only use that platform. Yes, that platform could be connected to an e-marketplace. It could be connected to a payment system. It could be connected to, customer data. We have access to the digital ID, and so we're able to draw data analytics from that. But for as long as it is isolated and siloed, it is only useful for those using it. The moment we are looking at interoperability, then we are opening that up on both sides, a supply side and a demand side. And being able to incorporate not just more use cases, but a variety of user segments. And so I want to give an example of payments here in Kenya called PesaLink. And so PesaLink has been around for how long? Maybe about two years. Now, there was a version of PesaLink that didn't really work, and now there's a new version. And what PesaLink essentially does is that it is an interoperable platform of not all, but majority of the banks. And so if a commercial bank is a member of PesaLink, I can literally sit here and do a real-time transaction, transfer money from my account, Kenyan Bank, into another account Kenyan bank. Now we know how it used to work. Go to the bank or send even an internet banking request. Okay, confirm. You know, it was, now it's real time within the PesaLink network. And so look at that as an example of interoperability, although at a national level. How much more if that also extends at a Pan-African level? How much more? Let's even just talk about EAC, the East African Community. How much more effectiveness can we derive from it if it just extends beyond the current geography? So interoperability is something that you'll keep hearing about as we go along. And of course, all the other things. Now, when we get back to the e-payments blueprint, it had 3 pillars, which is a conducive policy and regulatory framework. The moment we're talking about cross-border payments, this is key. The regulators have to be in place because they're the custodians of the financial stability of a country. And we also look at the enabling payments infrastructure and adoption of global standards for interoperability. Again, interoperability. But more importantly, that there's payments infrastructure that is developed. So if you look across the African continent, we see variations. If you were to draw a graph, you will see, you know, some countries, payments infrastructure is up there, some it's down here, some are trying, you know, it's not uniform across board. And so that presents a challenge when you want to say harmonize even standards, when you want to harmonize guidelines. Different countries are at different levels. And then lastly, one of the pillars of the e-payments blueprint is promoting a thriving business ecosystem and the strategic partnerships. So a thriving business ecosystem has one key ingredient, and that is competition. So it's not a monopolized environment where one provider, you know, is the one offering services, and so they can do it at their own beat. And we have seen that in some markets, and there's been efforts to sort of, you know, create a more competitive environment. But there are some regulatory issues that come in the way of this particular pillar. Some regulations actually prevent a competitive market. And within this e-payments blueprint, we're looking at cross-cutting areas, which is something that we've discussed quite a bit: digital and financial literacy, gender equity, and then financial inclusion. Now, I just want to go through very quickly what we found under the, you know, the different pillars. In terms of barriers. So when it comes to regulatory barriers, I've touched on this, there's also the issue of data governance. Again, in the era of digitalization, data is currency. And so there are many questions, there are many issues to be addressed as far as data is concerned. Who owns this data? Where is it sitting? What are the regulations around sharing that data? Is it localized? Is it, you know, universal, etc.? And then there's also the issue of exchange control authorizations and limits on transaction amounts. Really all about KYC, AML, and CFT. Know your customer, anti-money laundering regulations, and countering the financing of terrorism. And then under payments infrastructure, we've talked about this quite a bit, that we're currently seeing legacy systems, fragmented systems. In the payment space, just like we're talking about, you know, other platforms. Yeah, I can decide to come up with a platform today. Very effective, very useful, good customer base. But like we say, is it interoperable with any other payment system? What kind of segment is it targeting? And then a lot of the, under the payment infrastructure, a lot of the KYC, AML, CFT is not automated. So that means that the payment process is lengthy, it drags on. Customers have to keep on showing the ID at every point of interaction, whereas that could be automated and stored internally in the systems. And then there's limited interoperability. Now, and lastly, under the regulatory barriers, there's a limited cross-border financial data, something that we have discussed also at length, that now we are talking about, you know, we've been talking about remittances and how useful remittances are, you know, to the GDPs of each and every country, especially north to south. You know, people in the diaspora are sending money back home. And to a certain level, that data is available and it's provided a sense of direction. In fact, that's how the issue of remittances gained recognition, that it is a significant contribution to a country's GDP. However, now that we're talking about digital trade and e-commerce also taking center stage, where is the data? Where's the cross-border data? How do we know that, you know, Kenya, between Kenya and between East Africa, this, you know, this is the flow, and these are the patterns. These are the countries that are interacting or at least, you know, trading with each other the most. how is this money being sent beyond, commercial banks? How does that money move? Is it being sent via mobile money? Is it being sent through money transfer operators, brick and mortar? How is it moving? So we're looking at this and saying this data is useful for policy making. It's useful for decision making from a private sector perspective. It is data that is useful at several levels. So on payment infrastructure barriers, I think you will realize or recognize quite a number of them. Physical infrastructure, we know about this, that, yes, we have a lot of sort of alternative energy sources coming up, but still, that's not accessible or affordable to all. Basic devices are still an issue. Not everybody can afford even the cheapest one. So yes, quite a lot of progress done in that area, but we're not there yet. High internet costs, hence, most of internet usage in the continent is on mobile internet. That's what we're seeing. And then in terms of licensing, I don't want to be a regulator in this day and age. I'd rather be anything else in this ecosystem than a regulator. I don't envy any regulator, because every day there is a new development. Every day there is this and that and the other. And I think that's healthy for the era that we're in, because we see that innovation is still flowing, it is still happening. However, from a regulatory perspective, it is difficult to keep up with. And for regulators, sometimes actually one of their go-to methods is, if anything innovative comes up, especially in the payment space, the go-to will be, please go and work under a bank, under a licensed commercial bank, while all commercial banks are licensed. And so that sometimes also constrains or restrains innovation. And there's new technologies, and sometimes they're not harmonized, or at least they're not even according to existing standards. And again, on the issue of standards, and key, that's a discussion that is happening at a regional economic level, where the question is, do we need standards to guide payments? And not just standards at a national level. Again, something as simple as messaging standards. When you send a message using most of the payment systems, it is coded into a message. And those messages across different countries are not standardized. So that is one of the things. How can you do interoperability? I'll give you an example of standards. So we talk about a country like Tanzania having payments interoperability, basically meaning that, if you are a customer of Vodacom Tanzania mobile money, you can be able to send to Airtel Tanzania seamlessly at the same cost. And then we said, now we have interoperability. We can laud that effort. However, it is what we call bilateral interoperability. So this Vodacom has to go to every other provider and get an agreement for interoperability. Yes, we've tackled the problem of interoperability, but we've not tackled it effectively. Interoperability needs to be seamless, because the moment we start talking about Pan-African interoperability, then providers cannot go one to another. Okay, I've signed with you, now I need to sign with you, I need to sign with you. It needs to be a very seamless process, and we have different models of addressing that through aggregators, but that is still even not the best that we can do. I will still come to when I talk about the use case, you will see how now this addresses not all, but some of the issues around interoperability. And lastly, one of the payment infrastructure barriers is low trust in formal financial services. Trust is key in the space that we're in, because remember, we don't see each other. I think this came up also in the previous presentations. And so if we talk about a digital trade transaction, supplier does not know who they're supplying to, and they don't have to. It is not like a remittance where I'm sending money to my mother and I know her, so now I just send it, I am confident that she'll get it, and if she doesn't get it, I'll call and ask her, did you receive it? It's different here. It's people that don't know each other, and so trust is key. And the trust has affected, or it has impacted, the level of digitalization. There's people who are not participating in the space because they don't trust. Now, I know that we say, the pandemic increase the level of e-commerce and trade and digitalization. However, there's still that segment of people who need to see higher levels of trust for them to engage. Again, business ecosystem barriers, non-competitive markets, very high entry barriers for non-bank financial service providers. We're talking about fintechs here, mobile network operators to a certain level as well. And then high costs. And the high costs come not because it's high cost of delivery, but it's really inefficiencies in the supply chain. And then there are complex compliance requirements. You know, you could be sending cross-border a very low value amount, but you're still required to provide your ID, proof of income, you know, proof of address and all that for sending something as little as $50. And so for that, you know, there's always been a recommendation for tiered, know your customer. It has been implemented in some cases and not in others. And then currency management. Now, I think currency management is one that has presented one of the biggest challenges when it comes to cross-border trade in the continent. And just think about it this way, that if you're sending money, even within the continent, the standard currency is a USD. And so if I'm sending Kenya shillings to somebody in South Africa, my Kenya shillings will be converted to USD as they move across, you know, the payment ecosystem. Now, what is the exchange rate? We're talking about stronger currencies, weaker currencies. By the time the money is getting there, it is nothing. So now, how do we address this? And let me also mention here that one of the challenges here has been the reliance on correspondence banking. That previously, you could not send money directly, you know, from one country to the other without having an intermediary, which is a correspondent bank. Now, the correspondent bank doesn't sit in Africa most of the time. It sits in Europe, you know, it sits in the US or something like that. And so that currency, that's why you have to have the conversion into a standard currency before it converts back into the African currency. I'm getting into this detail so that when I get to talk about the use case, we start to see how actually the use case is addressing some of these challenges. And the other thing, or the other barrier with the correspondence banking is that, as you know, wherever that correspondence bank is situated, when the regulations change, it affects the banks that are using it as a correspondence bank. And in fact, some of them have just kicked out these banks. And so these banks don't have correspondence banks anymore. And that constrains the activity at a cross-border level. And so that actually has presented, so we call that de-risking. That has presented a huge challenge when it comes to cross-border payments. But I'm happy to say that innovation is bringing a new wave of payment systems that are not reliant on correspondence banking. And there is nothing wrong with correspondence banking for as long as there are other options that customers can choose from. So, so one of the other things that happened with the blueprint is what we call prioritization. From the 3 pillars, we generated 30 strategic action points, and these are the top 10 that you see here. And these top 10 are guiding some of the activities or some of the interventions that will be generated from the blueprint. And so what I'd just like to take you through shortly is an African case study, and which is the PAPS, the Pan-African Payments and Settlement System. So this has been in the works for a long time. I mean, I think it does take a long time to develop a payment system, especially if it's Pan-African. And like I've said, it is also, it has to address the key issues. If it's not addressing the issues, then, you know, we might as well not have it, because there are many payment systems. East Africa has a payment system, East Africa, EAPSS, East Africa Payments and Settlement System. If we look at the other regional economic blocks, they do have their own payment systems as well. SADC has one as well, and they've sort of gone through different waves of their payment system. And if you look back to PAPS, it is not specific to a regional economic bloc. It is actually addressing the continent. It is centralized, so it is not overlapping with national payment systems. Most national payment systems are really that they work at a national level. It is also defining a common framework for transacting, clearing, and settling cross-border transactions. Remember that there's a huge issue with standards, messaging, and etc. So it addresses that. And then payment is instant and in local currencies. So this is probably one of the biggest things, that the selling points for PAPS, that we now are looking at payments, instant payments, and then local currencies. And then settlement is on a multilateral net basis and on agreed settlement currencies, and it operates 24/7. And the messages, there's already a messaging standard that's accepted. So very simply, how it works is that you have a sender and sending institutions, and I will get to a place where you can see some of the sending institutions. And remember that PAPS launched in January, and so the process of onboarding more and more partner institutions is still ongoing. It's not a done deal. But basically, a sender will send through a sending institution, more importantly, through their local currency. So now PAPS sits in the middle. Now, from all the payment systems that I'm talking about, you see that there's always an intermediary. The question is, where is this intermediary seated? And what does this intermediary permit in terms of currency? So here we see PAPS sitting in the middle of these transactions, processing these transactions on a real-time basis, but most importantly, at the local currency of the sender. And for the receiver, again, we have the receiving institutions. PAPS is able to process this and send it at the local currency of the receiver, another very, very key point, and through a receiving SME company in the case of SMEs or individuals. And so basically we see PAPS coming in and doing the work that was being done by different payment systems. So it is actually consolidating the functions of various payment systems on the send and on the receive side, just sitting in the middle as one. Previously, this same transaction had many more players than just one. And so PAPS is actually fulfilling quite an important role there. And so I'll just go through this quickly, the business case for PAPS. Remember that we're talking about a continent that has various countries, 55 countries, and I think 42 currencies, or something close to that. And so previously addressing very onerous KYC, AML, CFT requirements, I talked about this, that you have to provide a lot of documentation to confirm that you're who you are, yet the amount that's being sent is not commensurate. Also, it's reducing the duration and time variability of payments. We know payments that take 2 days, 3 days, and a good example, I hope no one is here from SWIFT, or at least has a relative there, but we know that some of those take quite a long time to reach. And here we're talking about real time. You send it, it is received, it is cross-border, real time. It's very important, especially when we're talking about trade, because we talk about the liquidity of the traders. So if they're not able to settle immediately, if the funds are not received immediately, then now we are holding their liquidity. And that's really the next thing there, not just for the traders, but also for the financial institutions that are participating, for the central banks that are the custodians of this settlement process. They have to ensure that settlement is done within the appropriate time. And then I talked about correspondent banking, and now we're not dismantling the concept of correspondent banking, we're providing alternatives. For those who still want to use that, it's available for them. For those who want to use alternative methods, those are available to them. And the strengthening of African currencies, that if you're trading within Africa, then you're able to trade with your local currency. You don't have to convert it to a standard currency and then convert it back. And so that also strengthens. Now, the thing about even within Africa, currencies are not the same. You have some that are in higher demand than others, and that has also been taken care of through PAPS because they're able to provide a buffer for the currencies that are in low demand. And lastly, PAPS, it serves as an added tool for monetary policy management, and it strengthens the central bank's oversight for cross-border payment systems. Now, this is important because of all the issues in the cross-border payments ecosystem, what has happened is that some people have tended to do informal transactions. So they operate outside the formal system. And the moment that happens, there are many risks. Now, it can be convenient for them, carrying cash in trucks and hiding it, in the engine and all that. However, it just means that then the regulators don't have oversight for that. And now, the moment they don't have oversight for that, we know that it can be open to misuse and abuse. And that's why we have issues of financing of illegal activities and all that. And so it is in everyone's best interest that cross-border transactions are happening through formal financial systems. So just an illustration there of the PAPS ecosystem. I have sort of gone through quite a number of some of these areas, the products and innovation. Let me just talk about the escrow service. Because that is important whenever you're talking not just about cross-border payments, but when you're talking about payments in general. So earlier I talked about trust, and we said there's no trust. And I'll give a good example of something. Immaculate, I'm sure this is of interest to you. We have digital people who work online workers. So their work, they either they write papers or they deliver their work online. And you hear in a lot of cases that they do the work and then the payment doesn't come through. And or even an e-commerce provider who sends goods and the goods are received and the payment doesn't come through, especially where it's fragmented. It is not one seamless process. And an escrow service is very key, because then we know that the person who is supposed to pay for the service will put their funds in the escrow service. And then as soon as the goods or service are delivered, then the payment is released. And so here we see PAPS providing this. And there are a number of payment systems that provide that, but we don't see it as the norm. It is really an exception, and it needs to be the norm. It is going to build trust, because I know that your intention is to pay me. Now, when somebody's intention is not to pay you, they will not put no money in no escrow service. So it is actually quite important when we talk about e-commerce and digital trade. And we see, we have PAPS Core, we have different participants, both direct and indirect. The more participants we have on PAPS, the better, because then it builds a strong ecosystem, and the interoperability is stronger, because then we're able to interact with different payment systems. Again, partnership, like I said, when we get to the partnership, you see it is slow, but I think that a lot of the very, very key players are on board. And hopefully, as we go along, that is also going to improve. And let me also just stop here and say that this is not the magic bullet in payments. We still have quite a number of challenges outside of PAPS, but it has addressed quite a number of the very, very obvious and long-standing challenges in cross-border payments. Yeah, so that's really about PAPS and how it's addressing some of the key challenges. And I think I just want to tie back the importance of a strong payment system. When we talk about digital trade, it has to be a strong, it cannot just be any payment system. It has to be a strong payment system to support digital trade, to promote digital trade, to encourage players to shift from informality to formality, to encourage, or at least it facilitates inclusivity, that those who previously could not access it are able to access it. And that's really my presentation, and yeah, thank you.
Thank you very much, Judith, for this crash course in e-payments. We take questions now before we move into the breakout sessions. Any questions or comments? Yes.
Thank you. Very interesting. Couple of questions. Is PAPS operational already? Is it? Okay. Who owns it? And then the question is, how do you avoid the loss of value? For example, if you send Kenyan shillings to someone in Ethiopia, I would assume that first the Kenyan shillings are being transferred into USD, and then to USD to Ethiopian birr. So there's a lot of waste there. I mean, there's a lot of money gone there. How do we avoid that this transaction costs are very low?
So what PAPS has done, you can hear me, I hope. What PAPS has done is that it has avoided the need to always. Yes, so it's avoiding the need to always have to convert to USD. That is the correspondent banking model. So what PAPS is doing is that they have, I'm just trying to remember the name of a fund that they have, which buffers strong African currencies, the strong and the weak ones, because it's about the demand and supply. If PAPS takes the Kenya shillings and has to cash out Ethiopia shillings, the one currency maybe is in higher demand than the other. And so they have a fund, I can't remember the name, sorry, but it exists. And that enables the fair trade, and also to encourage countries with stronger currencies to trade in countries with weaker currencies through that fund. So that's actually why it exists. And I think presently it's about 500 million or 500 billion, some big amount of money that's going to facilitate that at the start. But of course, then now the issue becomes, after that fund is exhausted, what next? Presently, then now you can trade between strong and weak currencies within the continent without necessarily having to convert to standard currencies like USD or Euro or pounds. Yeah.
So can I do a transaction now?
Well, I will have to find you a send institution that's already onboarded onto PAPS, and then the receiver also has an institution that's already onboarded, and that's because it started the onboarding process. And like I said, as we go along and we have more institutions onboarding, it will be an issue of just walking into an institution that is a partner with PAPS, and your transaction can move across. Not necessarily. Some of the institutions that they're partnering will not be banks or brick and mortar institutions. We have some of them through MFS Africa, and MFS Africa has a lot of partnerships with mobile. So you could still be able to do it via mobile or via internet or online interface. Yeah.
Any more questions from the virtual?
So just to maybe clarify just quickly on that. So perhaps the last 6 months of last year launched in West Africa and the West African Monetary Zone in 6 countries there. And it's a system to link central banks. So the commercial banks and things need to come on, but the first point of call is that the central banks need to participate. At the moment, it's launched and is available like in all countries. And so the 500 million US dollar fund from AfriExim Bank to support that will go up to 3 billion in total. But it's at this stage only really functional. The 7th bank is the Bank of Djibouti. It's about to come on board, but as more central banks come on board, then the national banks or the other service providers, and Judith has mentioned MFS Africa as the biggest interlinker of mobile wallets on the continent, is one of the providers sort of on there. But in order to enable this currency convertibility, then the central banks need to be on there. So it's really a system at the core for connecting central banks, and then the other players sort of sit over the top of that, but in the core of central banks.
Thank you. My name is Gabriel from Ghana. So just to ask a bit of clarity, do we have the Bank of Ghana already on this before I pass on my next comment? Right. So I think clearly we are seeing that, from Ghana, we are seeing that interoperability, is the itch for us today, because, mobile money, we know, it's mobile money is successful, but what we've seen is that the private institutions from the mobile money players, really owned the space, right? And so there was some level of trust because we wanted access to financial services in Ghana. And a lot of people who were unbanked had mobile money, payments, as the simplest means to receive cash from their relatives and all that. And so I think government pushed this as well, because if, for example, the central bank decides that, everything should be on one space. So what we saw in Ghana, the success for us is that there was ownership from the Central Bank of Ghana. They allowed innovation as well, and so we saw that people were just moving money from one place to the other. And I guess we are aware now that in Ghana, there's a 1.75% slash on mobile money payment in Ghana as we speak. So clearly we are seeing the growth. For us, we've seen that interoperability was the success for us in Ghana. Yeah, so just some shares.
Important to mention that the model for interoperability in Ghana is one of the more desired ones, which is through GIPS, which brings all the payment providers, not just the banks, but the mobile money providers as well, through a sort of national payment system. And that has provided very seamless, as opposed to bilateral interoperability, very seamless interoperability, hence, I think also the growth. Yeah.
I just wanted to say thank you very much for answering my question on the cross-border issue of payments, because as you observed, most of the time when your countries are trading with each other, there's a lot of loss. You have to convert to USD, and then you convert to the local currency, and you're just buying a bag of beans from Moyale, which is across the border to the other side of Moyale. So I'm just I wanted to emphasize the importance because also we heard yesterday from Dr. Selfak that the intertrade within Africa is very low. In fact, the percentages were really astonishing. And this is one of the things, this is one of the factors why it is like that. It is so expensive, you know, to just buy the same commodity from Tanzania. You'd rather buy it from the UK because you just convert it into pounds and you don't lose any money. So I just hope that it is operational and that it also reaches the MSMEs, the target audience, because the other factor that I would ask is how far are the small scale micro enterprises assessing these parts? Or is it only still the bigger bucket tickets or the big companies that have accessibility? But it is a great development for intertrade in Africa, and we hope that GIZ continues to contribute to the operationalization of these parts. Thank you.
Thank you very much.
Okay, thanks Judith, thanks for your questions. We now move to the breakout sessions, which will now be a little bit shorter than planned originally. We need to be back at 4:30 in the conference room downstairs. Okay. That's great that we can buy in a little bit more time. So then I think we can take maybe a couple of minutes break and then move into the breakout sessions. There will be 3 in total. We will have one virtual facilitated by Severin on the case study from Senegal. The same topic will also be covered here in person to Jael and Salia, sorry. And you will meet them outside one of the seating areas. And if you want to learn a little bit more about the process of the blueprint and e-payment, then please stay here in the room. The session will also be streamed, so everyone who is now in the virtual call, if you like to listen in more about the e-payment, then just stay in this call. Otherwise, Jacob will post a link to the virtual breakout session on the case study in Senegal.
And at what time do we start with the virtual sessions?
I would say, yeah. So just to clarify a little bit, so the idea is not to discuss our Senegalese idea. We wanted to, as we are in discussions the whole day, we wanted to have like something more like brainstorming interactive, and we are actually proposing a design thinking session where we can think about our own innovative solutions that we might.
Again here at 4:00 as a quick wrap up, 10 minutes to collect the key takeaways from the breakout sessions. And then we have enough time to move downstairs for the last part of today's conference. So see you soon. Thanks. I look into the room.
So yeah, we had mostly an informal discussion, let's say, but also a little bit around the topic: how do we ensure the access that people in the regions, for example, in the rural regions, have access actually to the digital services, because they often have no good internet, or they have to get credit on their phones to have internet, which is expensive for them. So we don't really have a solution, but we discussed that it's an issue and that we have to think about when we offer digital solutions.
And I think general conclusion has to be, with all these digital platforms that we're talking about, that there's very fundamental questions that you have to ask yourself at the beginning to actually be able to make them sustainable. Because once again, the question of what happens when the original funder of the program or if the platform leaves, where's the data stored? How can the platform be updated in future? Is it really, are the processes on the platform really easy to follow? Is it user friendly, et cetera, et cetera? And so yes, it has to start with an initial idea of why it's necessary. I think the other colleague earlier asked, I mean, why do we, what's the point of the platforms, right? And I mean, the idea is to make things easier and to have access for all. But that really implies a lot of additional questions that come after. And so it's not at least this is my conclusion now, trying to do this myself in Senegal with my colleagues, it's not an option to just put something up and then try to figure out those questions later. I think the thought process really has to go in at the beginning, and then take your time and then put something in place that makes sense and that's sustainable and that can also be improved.
Okay, I think you summarized it quite well. Of course, digitalization has huge potential, as we have seen today on various use cases. But in the end, it's all about how we implement it, how we sustain it. I don't think there's any comment from the online audience, right? I don't think so. Just checking to make sure you're also covered. No, okay. All right, then I would say we can call it a day for today. Thanks a lot for joining again. To our virtual audience, you have all the contacts in the chat to reach out if you like. And for the people here in the room, I'm sure there will be many follow-on conversations after this meeting and for tomorrow. Thanks again for joining us today here. I hope you could all take something away with you. Yeah, and happy connecting and networking going forward. Thank you, and yeah, speak soon.